Bandhan Bank gains 3% after the board approves selling off NPA and written-off portfolios. The bank also announces the appointment of Ratan Kumar Kesh as Executive Director for 3 years.
Anupam Rasayan is up close to around 3.5%. It builds on yesterday's gains after it signs an MOU with the Gujarat government to invest 670 crore rupees for 3 new plants. The management tells CNBC-TV18 the margin will remain intact or improve after the capacity expansion. Says the total revenue potential for the company could move to around 3,000 crores by 2025.
Sonata Software gains after signing its largest ever contract worth $160 million. Sonata will be managing the end-to-end IT modernization and transformation for the client.
Emami says that its board will meet on Friday to discuss a share buyback plan. The stock is up a good 5%.
Hello, you're watching us here on Chartbusters on CNBC-TV18. The first hour of trade, well, it has been a little choppy, but so far bulls have been on top. The Nifty is up around 32 odd points. This after a 120-point gain that we saw yesterday. It opened high right into the resistance, and thereafter we saw some bit of a sell-off. The Nifty Bank is the culprit here, sitting with a gain of just around 0.15 odd percent. That's about the market right now. Individual stocks are buzzing around. We have Emami, which has moved to the high point of trade, and this after the company has announced that they will have a board meeting on the 24th to consider a buyback. So that has the stock excited. But, you know, apart from individual stocks, Nigel, by and large, it's been a bit of a tug of war.
Well, that's right, Manglam. It's been a bit of a tug of war as we speak. But the IT index, that's the one that's been underperforming for the last few days. That's popped back in trade today. So I think, that will try to hold one end up. But for the time being, it's come off the high point of the day. We're getting news coming in on Mahindra. IFC, a member of the World Bank Group, will invest close to around 600 crores in the new company. The company will transfer or sell the last of its mile mobility business to the new company as well. So that's a development coming in on Mahindra. And the new company, the valuation is around 6,000 crores odd for this IFC investment. So keep an eye on that stock. A bit of, a bit of an uptick is what we're seeing out there. So it'll house the last mile mobility for, the two-wheelers, the three-wheelers as well. So keep an eye out on that front. We'll try to get you further analysis on that particular piece of news. Well, for the time being, let's focus on the markets. Vishal Malkan joins us for a technical check. Hi, Vishal. Good morning. How do you approach trade? We had a bit of a relief rally yesterday. And from the lows that we saw a couple of sessions ago, we're still up close to around 200 points. Do you think the markets have enough to build on to these gains?
Yes, good morning. I think Nifty and Bank Nifty have done a great job of protecting the lows which were made during budget. They broke those lows but could not sustain below them and came back above that 17,000 level for Nifty and for 39,500 for Bank Nifty. So I think as long as we protect those lows, we have an intermediate low in the place and we can build on this rally and we can go back to 17,500 to 600 and 41,500 to 42,000 in Bank Nifty. Definitely looking good on the charts, both the indices.
All right, looking good on the charts as well. What do you play this up move through individual stocks then, Vishal?
So I would look for more of banking stocks, and in that, first of all, would be Bank of Baroda, which is taking a great support at the levels of 155, 160, which is an important support on retracement levels as well as RSI levels. So, and overall, the monthly chart is still bullish. So I would go with the buy with a stop of 162 for a target of 175 to 180. And the second would be from the same space, finance is AB Capital, where I will go with a buy of 152 with the stop loss of 152 for a target of 165 and 168.
All right, Vishal, thank you for joining in and giving us all those details. Meanwhile, some news coming in on VS Retailers as well. The stock up around 14%. As we do that, let's shift focus to our special segment. A few ideas from our colleagues at Money Control Pro. These are ideas for profit. Anubhav Sabu joins in.
Thanks. So talking about AMI Organics, which has a dominant presence in some of the pharma intermediate molecules. Now, key development which got attention is that company has signed a multi-year contract with Fermion for one of its patented products. Now, this is partly a reflection of Europe Plus theme, wherein European companies are reducing the stages of production and looking to outsource intermediates from India. Now, coming to overall business, in case of pharma and market at the industry level, company sees a gradual pickup in demand after a recent lull. At the company level, traction from the committed order book from originators is expected to continue in fiscal year 24. Meanwhile, for the specialty chemicals business, company is expanding on the clientele side and investing in process engineering. In the quarter gone by, our company has added about 39 clients, and therefore volumes are expected to pick up from here. In addition, high cost inventory are mostly exhausted, and hence margins are expected to pick up further from here. Now, coming to valuation, stock is trading at a premium compared to the sector. This, in our opinion, is justified given the higher the industry growth, which is largely contributed by new products.
All right, interesting one out there. Thanks so much, Anubhav, for joining in and giving us that take on AMI Organics. The stock has been reasonably stable in an otherwise wobbly market for the last 1 month or so. Well, we'll slip into a short break, but on the other side, we'll get chatting with the management of Rajasthan Wires. We'll get a sense in terms of how demand is shaping up on ground and what's the outlook for FY24. Welcome back. Well, the markets have come off the day's top. We're holding at around 17,130 odd. The markets have been a little bit jittery. But if I look at stocks that have done well in the last 1 week or so, one company that comes to your radar is Rajasthan Global Wires. Just pull up a 1 week chart. You'll see the stock has been gaining. To understand how are things shaping up and what's the way ahead from here on. Even today, it's up close to around 3%. We're joined by Mr. Chodia, the chairman and managing director of the company. Hi, sir. Good morning. Thanks so much for joining in. Well, in this sort of a market, when you see stocks going up 10% as well in a single week, it tells you that the street is a little bit optimistic on those companies. So my question to you is, how is demand on the ground as of now? I recall you had pulled back on your guidance for FY23. You said you'll end with volumes which are more or less flattish. And FY24, how are things looking? Both on the volume front as well as a broad margin number you could give us. 18 to 19%, I think, is what you were indicating in the past. Go ahead, sir.
Yeah. So, Nigel, I was recently with all my customers, and, the customers can tell you how is the demand. And we always go by what our customers are saying. So there was ATMA conference, Automotive Tire Manufacturers Association had a conference where they indicated a growth which is little more than the GDP growth in India. And coupled with that, they are also forecasting a growth in the export of tires. So overall, the 65,000 tons tire market is to grow to 165,000 crores of market by 2030. So if I factor in all those numbers, we are looking at a growth of 10% in the Indian demand for bead wire next year. So which is good for our business, and we are looking that the Indian business, Indian supplies will grow next year. If I talk about, special sectors, like there is a good growth in commercial tire sector, passenger tires are also doing well, but two-wheelers, which is rural economy based demand, is not doing so well.
Give us a couple of numbers, Mr. Chodia. Volume growth number. Good to hear, the kind of scope of business that you can see. And at that conference as well, they're fairly confident. What is the volume growth number you're looking at for FY24 as well as your margin band?
We are looking at 10 to 15% volume growth in India. Current year we are close to 60,000 tons, which will grow to 68,000 tons in India. Thailand was more of a problem last year, okay? Because Thai tire companies are there to export to USA and Europe. And for all the reasons known to you and everyone, the European export was low. There were huge, there was a geopolitical problem. There were, supply chain disruptions. Freight rates had gone up. People were sitting with high inventory cost. But now I think all that has become, it has normalized. Freight rates have come down. The high cost stocks are getting over. Geopolitical problem has become kind of a normal now. We all are living with that problem here in India as well as in Europe. So, looking at the current indication from our customers in Thailand and export from Thailand, we are projecting at least 30-35% growth in volume in Thailand. Yeah.
All right. So 30-35% volume growth in Thailand. India would be around 10 to 15%. On a blended basis, we can assume around 20% growth for your company in the next financial year. And what about margins? Because you said you will maintain your margins between 18 to 20%. I see, your solar rooftop project as well likely to be installed in the next financial year. How much would that mean in terms of cost savings for you? That's point one. And secondly, we saw promoters buy about 50,000 shares in the month of March itself, and this is data that you've revealed to the exchanges. Not a substantial amount, but the fact that promoters have entered, was that just transactional before the year-end closing, or do you see promoters buying a little more at these levels?
Yeah, so about margin, we are, our projections are based on 18 to 20% margin. I don't expect any better margin in future also. It was better because of the tailwinds in the prices of our raw material. We got advantage of price increase, and the better margin was because of the profits in the stocks, which is not normal. Okay, so our cost will continue to come down because of various initiatives we are taking. But we are in a competitive business, so we will have to keep passing on the cost benefit to our customers also. We are targeting a bigger market share, which cannot be possible with a very high margin. Now, on promoters buying the equity, because promoter family is only in one business, we don't want to divert our focus. So whatever little we have, we keep investing back in Rajasthan. Okay. The company I know the best, I would like to invest there and not spend my time looking at other opportunities. Yeah.
So you think you'll continue to buy then?
Sorry?
Do you think you'll continue to buy at these prices? The stock in the last 6 months is still down 35% from the peak. And this is one business that you know better than most analysts or all analysts. So will you look to keep up?
These are family savings. I don't have big amounts to buy, big numbers of shares. Yeah.
Okay. All right. And you didn't mention the solar roof. Okay. That's about the shareholding. What about the solar rooftop project? What will be the potential savings out there? That will be installed in April, right?
Solar rooftop will be installed in Thailand this year. And then we are planning solar installation in our Chennai project also. So it's not a big saving, little saving in the power cost, but at the bottom line will not make very big difference. Yeah, these are small savings we continue to work on.
Okay, and just to clarify, the blended volume growth will be 15% or 20% for this year?
We are targeting 20%.
20%. Got it. Thanks so much, Mr. Chaudia, for stopping by and giving us those details. So the demand on ground seems to be picking up. Export market in particular, given that freights are down, US and Europe were in a bit of a tizzy in the past year. But he's expecting a recovery in FY24, 20% volume growth, margins of around 18 to around 20%. And the promoter entity continues to show faith in the company. The stock has corrected a good deal from the top, but in the last 10 days or so, it's seen a bit of a spike up. For the time being, we'll slip in a short break. You come back. We continue our focus on markets and stock-specific action. Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, insurance stocks have been in focus out of the budget announcement of taxing high-ticket, non-linked savings policies. So what is the outlook going forward for insurance companies in FY24? My colleague Surbhi joins us to fill us in with all of those details. Surbhi?
Post the budget announcement of taxing high-ticket non-linked savings policies, all eyes are going to be on the premium growth numbers for the last quarter of FY23. The Feb business data shows divergent growth trends, where the private life insurance players saw an 18% growth in their retail APE, whereas LIC declined by 3%. Now, this growth should be seen in the context with the recent budget change and the fact that there are only a couple of months remaining now to escape the impact of taxation change. This is evident in their numbers as well. Most of this growth is led by high ticket size policies and not by the number of policies sold. The average ticket size is up 32%, whereas the number of policies sold is declined by 15%. In the listed space, All players, barring SBI Life, has seen an average ticket size growth of 15 to 20%, whereas the number of policies has declined by 2 to 21%. This growth is expected to continue in March as well, as the pre-booking of high-ticket non-linked savings products will continue till the end of the fiscal. Now, the analyst estimates suggest that the companies will see a growth of anywhere between 15 to 40%, as opposed to 5 to 10% same time last year. However, that number needs to be monitored is the number of policies sold. With all the negative sentiments around the budget announcement, there are a few amendments that can work in the favor of the sector as well. The possibility of a composite business license that will facilitate open access for the company to operate in any kind of businesses, and also the regulator has proposed to simplify the existing regulations on commission expense and expense of management, which gives greater flexibility to the company to structure their commission payouts. However, the real question is, will these amendments outweigh the negative impact brought on from the budget announcement? Life insurance stocks have corrected anywhere between 11 to 23% since the budget day, and all of them are almost close to their 52-week lows. When you see their valuations on a one-year forward basis and compare it to their pre-budget levels, it has corrected quite a bit, with HDFC Life seeing the most correction, followed by SBI Life and Max Financials.
All right, that's about the insurance space. It has been a buzz. Just keep an eye out on Emami as well. We spoke about how the stock's buzzing around as the board will meet on Friday to discuss a share buyback plan. Was just looking at a couple of details here. The shareholders' equity that the company reported as of the last public data that we have is close to around 2,320 odd crores. And the company, as a result of which, with board approval, can buy 10% of that. That's about 233 odd crores. With shareholders' approval, can buy about 583 crores. Was also looking at what the balance sheet of the company supports. Well, if you just take a look at the cash, bank and current investments that they have, that amounts to about 250 odd crores. So chances are that they are likely to go with the board approval of around 233 crores of a buyback itself. The stock, of course, has corrected about 30% from its 52-week high, largely on account of the weakness that we're seeing in the business. Has valuation support, so maybe that's what prompted the company to go ahead and announce that buyback.
All right, Mangalam, thanks a lot for that. Clearly, big outperformer today, up close to 5.5%. Well, on that note, we'll wrap up on this edition of Chartbusters, but you stay with us because Trading Hour comes up next.